Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:16 p.m. on a beautiful snowy evening out here in the New York, New Jersey waterfront. Quite a few inches of snow out there on the ground. Real nice. This is a strategic midweek webinar, videocast, as we call it. This session will be recorded, uploaded to the Clueless Trading YouTube channel for full viewing by anybody who has internet connection. Definitely pass the word around. Very valuable information, very accurate information, actionable money-making information that's put out there on these video blogs, what we call videocasts, out there on the Google channel. Also, a quick friendly reminder, do follow us on the Instagram channel. We're starting to get a nice following, and highlights of the day's trades, well, a few of them, and particular charts and stuff. It's primarily for promotional purposes, are posted on the Clueless Trading Instagram channel. It's a great resource for people to get a glimpse of what we do here. Of course, it's not for real-time alerts, and it's only posted later in the evening. So feel free to check it out. Hit some likes and get a lot of followers to follow us there. Spread the word. Full disclosure: this is purely for financial education, not for any solicitation or advice. And let us begin. So before I get into the charts, and I want to keep this reasonably brief, because everything that I do is laid out bare and in minute detail on the real-time Twitter feed. So you guys can certainly take a good look at it if you missed it during the day, and you can certainly see the whole day's action beautifully curated in the form of visual actionable charts on the real-time feed, as you all know by now. On that note, a couple of things here. First and foremost, which you all know because I keep on updating people, November 15th was the day that, which was supposed to be the day of reckoning for hedge funds, as we all know, because that's the day that they get their redemption requests, and they get to see how many of the big boys are fleeing those so-called smart dumb money, as I like to call it, given that almost 80% of hedge funds across the board are way underwater. So what gives? Big brains. They have a lot of tools in their hand, the high-speed, high-frequency trading computers, programs, algos running right, left, and center, yet they can't make money in these markets. They blame everything from discorrelation, uncorrelated markets, the Fed, blah, 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 full of excuses. So make a long story short, today was the day of reckoning. Of course, like I said in my previous webinar, that if you know that there's going to be large redemptions coming because of your extremely poor underperformance throughout the year, and not just this year, for year over year, that's the average track record of a hedge fund out there in the U.S., then you obviously cash out a bit, and that's was one of the reasons why we had such huge intraday volatility. We played the ranges extremely well, extremely profitably, as you know, every single day. However, there was always a big sell program that came in and pushed the market down, right? So those were all simply the hedge funds using, using their holdings across the board in different sectors, tech, industrials, and biotechs, and those type of sectors, primarily to cash out and keep cash on their money market accounts, just in case they get huge redemption orders. So bulk of that selling, in my opinion, was done prior to that, because you don't wait till the last day, which is November 15 today, to do the selling, right? Obviously, makes common sense. So so that's number one. I'm giving you the reasons for this massive intraday volatility. I've explained all the other reasons before. We have had a very strong dollar, not good for global markets, not good for our exporters, and not good for the overall carry trade and risk-driven markets, i.e. stocks going higher. Remember, a risk-on day is the day that stocks are higher. A risk-off day is basically the day bonds are higher and stocks are lower, right? That's the term. So there was the strong dollar, which kept lid on market. Dollar still hasn't really pushed down that much, but it's starting to ease back a little bit. We have had interest rate jitters. We know that. Jerome Powell was on last night. I listened to it while I was in my car last night, and to be honest with you, The nerd that he is, he basically just said it the way it is, and he didn't say anything that would create a wildfire. How about that? He was somewhat. I know that all of us would like to hear from him that, and the market would certainly like to hear from him that, okay, there's a lot of things going on. These tariffs are slowing down global growth. Markets are getting very nervous. We have a strong dollar is hurting emerging markets, causing dislocations in all different asset classes. And in that case, we will go ahead and slow down pace of rate hikes. But he's not going to say that. Let's face facts here. You know, this ain't Santa who's going to come in and just give you something just because you were um, uh, just because you asked for it. If you're a good boy or a good girl, you're going to get gifts. If you're lazy and not a good boy or a good girl and very lazy, you ain't going to get anything. We're hardworking. We're all earning an income and we're doing quite well. So Jerome Powell, to make a long story short, did not, in my opinion, say anything to inflame the fears of the market that he's going to go hog wild. He did at one point, and I listened very carefully to his interview, concede that they are looking at these dislocations that are happening in the markets, in the global economy, the slowdown factor, the tariff situation, which can certainly slow down global growth and U.S. growth to a large degree if it's not resolved. Um, and he did acknowledge that. So that was good. The overall. Then we had the big drama of the day, which is going to continue now, and has been continuing, and now in the spotlight, the Brexit deal. UK Prime Minister Theresa May, and I'm just explaining this real simple. She's basically cut a Brexit deal with the European Union. Everyone seems to be happy, but her own party was very skeptical. The Tory party and the Conservative Party, they call them Tories, and she convinced her cabinet, but now she has to sell this package to the Parliament, and obviously, and on top of that, two of her ministers resign, and that's kind of standard procedure, to be honest with you. So nothing really new about that. And she is going to stand her ground. The biggest fear, the markets, when we went through this morning, and the markets originally, dipped really hard, was that in her interview, press conference that she was going to give, the biggest fear the markets were scared of, danger, was that she would give her resignation. It happens. They move back, and then somebody else takes over. They call a new election, and that was the word I'm looking for. The snap election, and none of that happened. She's going to stand her ground. She's going to fight, and she's going to see if she can get her deal passed. So that was overall positive. There's no full resolution yet because now it's going to go in December to the British Parliament, and let's see what happens from there. Okay. Now the other thing that happened that no one really talked about, some of you might know, was what was going on in China. You notice that the Chinese stocks, and we've been trading, a bunch of them, Alibaba primarily, and then we played Wuba, which worked out really good. Win is another China play overall, a China-centric play because of Macau. You notice that NetTeas did extremely well. We played that on earnings, up $14 right off the pop. And is China had a major issue over the last 2 months or so, 3 months, as the Chinese markets got hit. One of the biggest components of the Chinese MSCI index, okay, the MSCI index, and look it up, is Tencent. Tencent is the largest, I believe, next to Alibaba, the largest Chinese company out there, and it's been down almost 40% or 30 or 40%. That's Tencent. It's all about gaming, and it's about, they're into a lot of things, but primarily gaming. And one of the reasons they were down, aside from the tariff stuff, because it really doesn't really affect us that much, what Chinese gamers are doing, because they're really hardcore into mobile gaming, as you know, is the fact that Chinese government has banned a lot of these games from ban Tencent from releasing a whole bunch of their new mobile games because the Chinese government feels that minors are getting addicted, which is true from a social perspective, are just getting addicted to these games, and they banned Tencent from releasing a lot of the new games, even some of the big ones here. And I'm not a gamer, but the ones like Fortnite and things like that, they were not allowed to be released in China via Tencent, which has relationships with all our own gaming companies like Activision and Electronic Arts and stuff like that. And they were banned from releasing those games, so they couldn't make money that way. They couldn't make money on or they didn't ban all the games, but a good portion of their local developers which create their games, and their revenue had dropped pretty tremendously. Then the tech hit came in, and over the last couple of months, which we know, the overall pullback on the tech sector, so Tencent was heavily damaged. Well, Tencent finally released earnings last night, and they were up about 4%. That's a lot. That's like saying that, well, Apple was quite a few days was up almost 4%. For 4% is a lot for for a monster of a company. It can lift the whole MSCI Chinese Tech Index and stuff higher. So bottom line is, so that was another big plus last night that happened. So it was a big, huge relief rally out there that pulled all techs higher. And if you notice, the Chinese techs all day long, primarily, you use Alibaba as a proxy, they were strong. They were strong for a whole bunch of days, and our swing trades have worked out very well on the Alibaba side. We have House here who I just saw he was here, who was in, one of our members. He was up 300 some percent over the past week or less on Alibaba itself. And I've shown all the Alibaba charts and what we're getting, the 155s, 150s. It's all up to you how you want to scale out the options. November 16th, November 23, November 30th. I was primarily on the November 23rd and the November 30th ones. So, saying all that, we also had a couple of other positive. I'm giving you the positive. We all know what the negatives are. Okay, so let's talk about some positive stuff. So the positive was that if you remember, the Trump team was meeting on a emergency meeting on the auto tariffs. Well, guess what? We didn't hear a peep out of it. So no news is good news. So they didn't slap on a 10, 15, 20% auto tariff for foreign imports, which would cause a reciprocal retaliatory effect from our big auto partners, Europe, well, Japan. China's not. China doesn't sell any autos here, do they? I haven't seen any Chinese-made cars on the road. So what do you call Japan, Korea, Europe? The Bimmers, the Mercedes, the Volkswagens, you name it. So that didn't happen. So that was another positive. Then came the rumors about, we're starting to hear it, take it or leave it, but then came some positive feedback out of Larry Kudlow, Mr. Economic Advisor in the Trump team, who basically said that he is going to meet the Chinese premier on the 20th, which is right around the corner, and that they are going to talk, and they're going to talk trade. He said that on that early morning CNBC interview, which was a big positive. At least they're talking. It wasn't a statement like, okay, President Trump had decided not to meet Premier Xi. Now, how'd you like that, right? And then came some other news from the Financial Times and such that our trade representative Lighthizer, Ambassador Lighthizer, is looking to hold back on the tariffs that's the heavy duty one, the 25% tariffs that are supposed to go into effect in January of 2019. So there's a whole bunch of stuff going on. So saying all that, what it really comes down to is we're in the business of making money. All right. And all this other stuff, which is extremely critical for the markets and which create massive volatility. We know that. And one other point I want to make. We have had some members who have been excellent in doing a couple of really powerful short trades. And I'm not talking about the short trades that we do intraday, but powerful short trades on the likes of Amazon, which went from $7 to 20 some dollars and more. Okay. Our member Bob did that, and our member MB did that. She's here. And these are great because that's what it's all about. What it's about is to use my expertise and my work. It doesn't have to be my alert, but expertise and work on forecasting the markets on a intraday, intra-week basis, and using your own gut feeling and going with it. And congratulations to them. So they go, so from a standpoint of what this market's all about, I'm stating the obvious. This market is about extreme volatility. Just today alone, I believe we did a 600-point round trip. We actually did 900 points. We're up like 200 something. I can't even remember. And then we dropped 300 and change, and then we were up 200 and change. And the best part about being with Clueless A Trading is, and I know you guys appreciate that, is that, and I'm not looking for accolades or anything. This is my job. You guys are, as paying members, are getting you're getting to a serious value-added service that I pinpointed, and I create charts which were already there, and I created the other charts which are very relevant to this very extreme volatility we go through, and walked you guys through every single point, and in most cases told you what was going to happen before it happened. That's really where the big money's made. Anybody could throw a dart on at the market and make some money, but to consistently make money and to structure these, what people out there, including the so-called professionals out there on CNBC and Bloomberg and the Fox Financial Network, all these people, like, oh, it's a crazy market, they all look for reasons. And then they show you a inverted head and shoulder. We've been talking about it for days now. Now it's the hot term, the hot term on the financial channels. I don't know how many times I heard that since yesterday on CNBC. And the charts that they show, it's laughable. It's like a kiddie little thing they're trying to draw out. And we have it drawn out in the most intricate blow by blow, and the reasons why that's an inverted head and shoulder and still is, and you guys are full beneficiaries for all that. So keep in mind that what we are talking about here as we're moving along is we're looking at larger patterns which might or might not manifest themselves, right? That's just the way it is. There are no guarantees. There are just good probabilities and higher probabilities of making money on the long side or higher probabilities of making money on the short side. I tend to be more on the longer side because I tend to make a heck of a lot more money playing the reversals than I do playing the short side. Because I do believe, and that's the cognitive bias of mine, that we are going to retest this zone here before we fall really hard again. Now, it's very possible that we can fall from here all the way down to 2,600. I did expect that when the market was down here today. I did expect a retest of 2,650, which never materialized. But I am not dogmatically bearish, and I'm certainly not dogmatically bullish. And many of you are, and that's okay. Everyone has a right to feel what they feel. I'm just stating you from my experience being trading in the markets for the last 8 years. Last 7 years as a professional trader, and prior to that, my experience on Wall Street for almost 14 years, dealing with managing money, big sums of money, and dealing with and myself being a professional, also dealing with much higher level professionals and seeing what the whole money management business was all about and how it works. Okay, and we're part of that. So all that experience obviously puts me in I'm not saying in a better or worse thing, but I do believe that I have a far more deeper insight and understanding of the markets at least. I'm not talking about a 15-minute trade. I'm not talking about a 30-minute trade. I'm not talking about, oh, woke up in the morning, futures are down kind of trade. That's fine. That's fine. So I just try to share my experiences with you guys, and that's it. And overall, they've been more right than wrong. So saying all that, let's start off with the bigger picture, where we are right now. Oh, this is what I was going to say. What's really happening here, and this is the bigger picture. So if somebody closes their eyes, like I said, and doesn't look at the market for the next 3 weeks, they might just open their eyes and be up here, or 2 weeks, or even a week, for all I know, because things are really fast these days. Okay? So you're not intraday traded, patterns looking good. This is still a inverse head and shoulder, a very defined one with almost a triple bottom. And everything that I talked about from my previous videos, that's exactly how the market's playing out. I showed the scenario of that we could dip, test this big downtrend. This is a very large downtrend line going all the way back here. Remember that? Okay. From back in January 26th, right there. I don't tweak around these lines. And guess what? That's exactly where we came and retested. We have retested it several times. We retested it on the 14th, yesterday. We retested it on the 2nd of November. I'm talking about this line here. That's the major downtrend line. And we retested it yesterday, my son's birthday. And we retested and slipped below it today and bounced above big time. That's one heck of a bullish engulfing candle. There's no question about it. Doesn't mean that we can't come back and retest it again. So basically what's happened, so that's the bigger picture. The bigger picture says that at least from a purely technical standpoint, which technical analysis in itself is not 100% foolproof, right? You got to tweak it as you go along the way. That's why we look at the 1-hour charts. That's why we look at the 15-hour chart. And we don't just look at them, we trade them for money. So the point is that the bigger picture, and this is a very simplistic statement I'm about to make, the bigger picture shows you the overall large multi-week patterns or multi-day patterns, whatever you want to call it, with the possibilities, with the lines drawn where we can come down to and how far we can fall, where we're going to bounce from. Okay? So that's the bigger picture. The point is that when we are looking at these type of things here, what's happening intraday, which obviously takes over our brains as traders and investors, it's called the recency bias, like what's happening right now. That's why you get a lot of comments from retail traders and institutional traders like, oh my God, that's it. This is the way. It's just gone now. We're done. You've heard that many times. You've heard that many, many times. You know, that absolute black and white type of scenario that retail emotional traders and even institutional traders also paint. And the media paints as if it's black and white. It's not black and white, okay? It's not a color thing. It's a lot of gray. It is a color thing. It's a gray thing. There's a lot of stuff happening in the middle. And that is what we play for large sums of money. Case in point, it's happening every day. Look at today. Look at Apple from yesterday. I pinpointed the exact bottom. Exact bottom. Imagine they brought a trader on CNBC and said, this guy pinpointed the exact bottom on Apple yesterday and issued an alert to buy the stock. I probably have 200,000 Instagram followers. Think about it for a minute, the type of value-added service you guys are getting. Now, whether or not you guys jumped on it, took in a couple of trades, they were only 90 cents, for God's sake. You know, the calls. And these were the 200 calls. You had enough time left. These are the 200 calls going to November 30th. And they went from 90 cents all the way up, almost a double. Almost a double. They went to $1.60. Or if you bought it right at the close, they were around $1. $1.14. They closed at $1.06 yesterday at the close. And they went to $1.60. That's 60% on your money, guys. All right? So it's not rocket science. Now, my quad charts are absolutely brilliant. My think or swim charts are extremely accurate. The signals generated by quad on the tactical movements. They honestly, the QUODD, the platform that I use, I'll be honest with you, they must be they're years ahead because they designed it for these type of markets. Okay, it's a true truck that can navigate 20 feet of snow and squalls out in the Canadian wilderness or up in Maine or somewhere. All right, so or in upstate New York during a snowstorm. That's what it's built for. Think or Swim's excellent too. And of course, these charts that I produce on investing.com are so easy on the eye. And everything is drawn to literal perfection. And it's not drawn to perfection because I'm some sort of great wizard who sits there and just dreams up the points where the markets are going to go to. All I simply do, and like I said, I share. And the only thing I can't share with you guys is my brain. The rest of it I'll share with you guys freely, as I do. Only thing that I do, I draw patterns and I draw some very important supply and demand lines. Here's the supply, here's where the sellers are going to come in, and you guys can do this too. And I'm sure some of you practice it. It's not, like I said, it's not rocket science. So those are the lines that I draw. There's one more that I'm going to do right here. And you just got to train your eye to look at these things, and you will be able to manage this market a lot better than you're doing right now. And I'm sure some of you are doing a pretty terrific job too. You got to look at this inverted hammers. You got to look at the reversal candles, and all you got to do is just get a line and just join them. There you go. And then the patterns and stuff that I draw, that's where some of my expertise comes in. I also show you where it can go to, and 9 out of 10 times, and you guys know that for a fact, that it'll hit those levels on the downside or the upside. So and at that point, you take your profits or you dive in deep and buy. You take your profits. You want to short, you short, and you can and then the patterns come into play. This is again just between this is this week, by the way. This is the 12th. This is the 12th. This was Monday. This is where we are today. And if you look at it, and obviously these patterns don't manifest themselves as clearly during the day when the markets are flailing around. But then I show you those quad charts and I show you the 15-minute charts. I mean, even this type of chart, and you have an idea of what to expect. Things just don't randomly fall apart. Just remember that. Why? Because the people who are holding the stocks, they're not randomly selling. Some of them are forced to sell because of large margin sellouts. We all know that. Then there is panic selling that happens from the retail side, on the mutual fund side. But not that they panic, but mom and pop panics and calls up and says, hey, listen, I want to sell my 1,000 shares of such and such growth fund. Calls up the Fidelity mutual fund representative. And I started, like I said many times, I started my first job at Putnam Investments, and the first thing they did was put me in customer service, just to feel what it feels like to deal with customers. Every time the market dipped, and I was just starting to be a real keen student of the market, the phones would start ringing like crazy. Oh my God, they're all panicking, just the way traders panic. Stop losses go off, triggers, boom, boom, boom. Lots of dogmatic verbiage comes out, like this is it, this is the big one. Well, I have news for you. Every day is the big one. A big one up, a big one down. Just get used to it. So that's what happens with mutual funds. So mutual funds have to remember. Mutual funds give you the price at the end of the day. So they do their selling during the day, and you get a net asset value as to where you sold your share on that particular fund at the end of the day, not middle of the day. Right? That's why ETFs are so popular, because you can trade them back and forth. And ETFs are nothing but baskets of stocks, similar to mutual funds, except they are, there's what do you call it? They're not being individually managed, by a particular manager per se. So that's why end of the day you get heavy volatility. you also get a lot of ETF rebalancing that causes massive volatility. And when big sell-offs come, ETFs cause massive volatility because they're being sold by these machines or being shorted by these machines big time. Anyway, so the point is that this was Monday. Let me get the pen here. This was Monday. Intense volatility within a downtrend channel, no question about it. Each of these moves can be played very heavily. Each of these intraday pullbacks can be played very nicely. Big reversal, inverse head and shoulder. By now, you guys know exactly what inverse head and shoulder is. Even the very non-technical members in our group. So you have your head, you have your left shoulder, you have your right shoulder, you have your neckline. There's your neckline. This one broke out over the neckline. And we are basically going to complete this pattern. Not necessarily tomorrow. Who knows? But we are going to complete that pattern. If we don't complete the pattern, we know what the downside is. We know this was a big downtrend channel. We could easily come down and retest that 2705 level. That's about 30 points from here. And bear with me one second. Sorry about that. So we know what this. There's your downtrend channel. So there's a good possibility. There's certainly a possibility. Anything can happen these days within a flash of a second that we can come down and retest that. We also have another downtrend line here, which is at 26.96. And is it possible that we retest at 26.70 again? Sure. I think it's a lower probability, but anything can happen. Nowadays everything is immediate sudden flash crashes and flash rallies. So if we get a tweet out or something saying, not happy with China, who's that coming from? The next thing you know, we could very easily lose 300-400 points within a matter of 15, 20, half an hour. So obviously we have to be, cognizant of that. So saying all that, the thing that I want to keep you guys in mind, you guys should have in mind, is that we're really trading ranges. That's all we're doing. So we're trading ranges, and these range trading is extremely profitable. So we're not making it big bets that, oh yeah, the market's going to get back to that level or not, whether it's going to fill this gap, which is a lot higher, which is 150 points higher. I'm sorry, 50 points higher. That's a 600-point move from here to here if we just close the gap from Monday or pre-market Monday. And that's roughly 50 times 7. Yeah, it's more like around 350 to 400 points. And if anyone tells me that can't happen, well, it happens every other day. Happened today, top to bottom, right? So 2720 to 2780. Where we close at? 2730. Yeah, we close at 2730. This is 2780. That's 350 to 400 points, and that would be a major pattern completion. So keep in mind, all we're trading ranges. My charts I'm doing extra work for you guys, as you know, during the day, because I am literally walking my members through every literal move in the market, whether they're active day traders, whether they're active swing traders. What I know is they are actively knowledgeable about what's going on. whether you review it at the end of the day or you quickly take a look at it in between your busy schedule during the day. This is extremely valuable information on a real-time basis that I'm delivering. So let's take a look at the next chart. This one should go, this is a masterpiece. It's a masterpiece. So this was basically from the 14th. This was from yesterday. This was 14th at obviously, just past midnight of 13th, right there. And I put these little colored circles here because this was the opening on Monday. And it's very important for a trader, at least for a tactical trader like me, and I know some of you are, to review these things because it put everything in perspective. And as you can see here, these are not mom and pops. This is not grandpa's market anymore, as I've said for years. These are seriously mathematical, algorithmic, high-frequency trading markets. And we're nailing them. We are. No question about it. So, saying all that, this was Monday's open. We had a 15-minute window from Friday to sell. We had a 15-minute window from Friday's sell, because Friday was I'm sorry, what am I saying? Monday. This was yesterday. This was yesterday's open. I mean, yesterday's open. Yeah, 14th was yesterday. Losing track here. So we had, so where was the 13th? This was the 13th, and we closed very nicely on the 13th, if I remember correctly. 3:30, 4:30. Yeah, we closed right here on the 13th, right here. Then the market spiked up. Then this spiked down. We closed here, right there, guys, right there. See? So let me mark this point too. Just want to make a point here. So here is where we closed on losing track of time here. On Wednesday. Today was Thursday, right? Then we opened up here. Not Wednesday. This is Tuesday. Then we opened up here on Wednesday. We were buying these lows. We sold. Like I said, you get a nice gap open, and this was in the middle of the night, by the way, where the futures had dipped that low. So then we just ramped like a monster. It doesn't really matter because you guys were sleeping, and I checked futures like once around 4 in the morning. And futures were looking pretty bad, and doesn't matter because this is where we closed at. We were buying here on Tuesday. So you sell. You sell the gap open. It was a nice gap too. We had a 10-minute window to do that. I do that real fast. Then the market started cascading. It started cascading. Now this is a 15-minute chart. You can see that. Bang, bang. Started to do that, and absolute terrifying fear. I started to chart. I showed you guys what was going on. Did a quick spy short trade. Everybody's just like, overall, the few people who were in the chat were just like completely bearish. Fine. It's okay. No problem. And there was a big cluster here, and then the market gave in. The market gave in. The market gave in, and the market gave in, and then created a pretty massive bottom. And these were all shown beautifully on my, and you certainly owe yourself, if you haven't still seen it, on all the different charts that I put out there, tactical charts for using the Thinkorswim platform, as well as using the Quad Algo HFT platform. This is more of a simplistic version, what you're looking at. And then at 1:30, the market just turned around and went berserk. So anybody who shorted here on that last leg got burnt. And I'm talking about professional traders, institutional traders, even black boxes who basically shorted this level because technically it looked like we were going to go down towards 26. We're going to go lower. But nope. Right there, big fat candle that appeared at 2 o'clock. Prior to that, all of a sudden from midair, I'm sure it's not midair. There's some reference point back here that you can see in my longer term charts. There was a reversal. The market slipped, came down, tested 2687, and again, hundreds of points higher. It was back to where it broke down from at 11 a.m. That's the market, guys. Okay? And then the market, and then you had that window, make some serious money. And this is primarily for active traders, obviously. And then at 3:15, bang, gave it all back. Gave this whole thing back. Then the market closes here at 4. So this was yesterday, just yesterday. So at 4 o'clock, the market closes here. Nobody buys anything. I tell people to buy that Apple exactly at the bottom. And I'm going to keep on stressing it because it's a fact. That's the biggest, most powerful company in the world. And Plutosay Trading called the exact bottom. I even called the exact range top 2 on Apple if you look at my old charts. So saying all that, this is all through the night. All this happens. All through the night. Today's the 15th. All through the night, all this happens. Then the rally starts at around 11:45 midnight. Big rally, gives everything back by 5 in the morning. You're back to the lows by 7 in the morning. You're back up here again. This is all happening after pre-market, after market, pre-market today, and then gives in hard, and futures basically at 9 o'clock are looking butt ugly. Everything was going fine. They were holding it here till about 7:30, and they just let it go. They just let it go. And there was a lot of fear. I mean, there's a lot of consternation on what might happen with Brexit. But more importantly, all the shenanigans that you see, this is overall a lot of hedge fund activity that's happening. They're doing whatever they're doing, playing the futures, Globex futures markets to raise some money. There's just wild day trading going on. All right? While you guys sleep, while everyone sleeps. So the market's open here, right there at 9:15. This is 9:15, 9:30. The market's open here. Market's open. Now remember, we also had the other day, we had the 271.5 puts. Good stuff. Always have some hedges. I don't go too crazy, but I have a little bit. So those things work out real nice. And I think that was from the day before, if I remember correctly. So many trades in the middle of the day because I'm pretty active these days in managing my trades more effectively based on my charts. So can't remember every single trade that comes through. I do quite a few extra trades that I don't post, but those are real fast and take advantage of the volatility. You guys can certainly do the same thing too. So then comes 9:30, 9:45. So 9:30 the market opens here. You literally have a 15-minute window. You have a 15-minute window. And bang, 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 they let go of the market. This is where initially things are higher. Most things are higher, or at least the best part is that we're playing very selectively, as you guys all know. I don't want to sit here and list all the huge monster winners from the altas to the earnings winners, which we always buy a basket. So there'll be one or two that plop down and one or two just go through the roof. So bottom line is, this is where some of our members who had their own shorts going made out like bandits. Bandits. And good for them. So you had this massive sell-off. Let me clean this out. You had this massive sell-off that lasted from 9:45, 10 o'clock. Of course, there's a lot of volatility in between while it's going on. It's not like a straight line down. 10 o'clock, 10:15, 10:30. By 10:30, I don't think there's a single person who's ready to touch the market. In the meantime, we are strategically positioning ourselves completely primarily based on my quad algo HFT charting platform, where I'm starting to see the fluidity of and the beauty of the candles as they are dipping. And remember, I did put out a quick short at 20, saying that the market looked like it was going to go to 2650 based on my daily charts. It never even got there. Went down a little bit, and I got out of that with about a 20% loss on the short side, SPY side. I saw the candle develop, and I'm looking on my other screen, and I post this on a real time basis. So if you guys have, you guys should all have quad. Do the trial session with them. I'm going to actually post their information tomorrow or Monday directly, so anyone can call them up, do their trial thing. It is just absolutely amazing. It beats any platform that you guys use or I use. It's better than Thinkorswim. It's better than anything I've used. And so bottom line is that I start to see the movement. I start to see the development of a wick, a small wick or a tail, and then I start to see the stochastics, which were continuously in a positive divergence mode, which I don't want to get into tonight because I don't want to spend 2 hours doing this stuff. But it's all there on my Twitter feed. I constantly keep on showing the positive divergences on the slow stochastics. It's a clear indication that they want to take the market higher, regardless of the flush outs. And there was a negative divergence, as you all know, on the VIX. On the VIX, and that was a clear measure that regardless as they spiked the VIX higher, pushed the market lower here, that they were going to smash the VIX. That's exactly what they did with the VIX, starting at around 10 a.m. And then the big fat ugly candle came, sell-off candle came at 11 a.m. So by that time, 10:30, 11 a.m., right there, the power move started. So even if you don't catch it down here, you guys gotta catch it here. And then I drew this chart, and lo behold, this is what happened. This was a cup. This was a handle. I showed that. There's your downtrend line. It retested that, slipped below that. Then I drew this. I drew this triangle, just based on what I could see here on my on the volatility peaks. And then, lo and behold, massive move on. This was when Theresa May gave her speech right there. There was some jostling around. There's no way to game this. You just got to wait and see how it develops. And then it pulled back a little bit. I told people to take a very decent sum of profits right before Theresa May's press conference, because I knew there was going to be volatility. And that's exactly what's volatility. And then that was at 12 noon, 12 to 12:30, and by 1:15 this happened. And even if you missed it there, you gotta buy these things. It's not a joke, So it gets here, it moves around a little bit, so all the levels are marked. And this is where we are right now, with features down slightly, about 8 points or so. Not primarily. That's it could be of Nvidia's fallout. Nvidia got hit on earnings, but there was no other negative development, at least on the economic front, that I could find. But who knows? So this is what happens, guys. All right. So when I'm creating these charts for you guys to trade off, then it's simple. Just do it, because nobody's going to be this specific on where the markets can get to each of these levels. Nobody. Show me another service which does this to this degree of accuracy. I would love to subscribe to them. I really would. So find one which does this, that in the middle of extreme volatility, they actually walk people through exactly what levels we can go to and where you can trade off. So if you're trading individual stock options, or you're trading in the SPYs, whatever, the SPYs or the SPXs, or individual stock options, where you need to get the heck out of Dodge and where you need to get in. So this is just another standard, more of a swing chart type of thing, even though it's a 15-minute chart. This is the VWAP. I've been showing it lately. You want to know, this VWAP went like really straight up. That's a very, very good sign. Positive divergences on the MACD, which was forming since the 11th. Since the 11th, this positive divergence was glaring yesterday, and I kept on showing that this is a positive divergence. It was making higher lows, the MACDs, and yet the market was sliding down. This was more glaring on the I believe on the algo HFT charts. All right, so this is another picture of a short-term chart. This is a 1-hour chart. So you get this is more difficult to read, but I wanted to show the megaphone pattern because megaphone patterns have a high probability of working, and this is a swing chart, not an intraday trading chart per se. And this megaphone pattern tells me that if things do go the way it goes, then we are going to basically hit the 2783 level, roughly 40 points higher, roughly another 240 to 280 points on the Dow. Let's call it 280 points on the Dow. So these keep things in perspective. Going out a little bit further, the inverse head and shoulder still looks intact so far. I don't like the look of the stows. They're still pointing down. They're still pointing down, even though they're making this was very much a positive divergence. Look what the stows were when we were here. We came down there, yet the stows created a higher low. That is a confirmed positive divergence, where the internals are showing you higher, internals showing you much stronger relative strength versus the fact that that the levels that we got down all the way to the same levels, but here the internals were a lot weaker, and here we got down to the same price level, internals were a lot stronger. That is definitively a positive divergence. Will it keep on building? We shall see. It certainly played out very well. Remember, when we're all the way down in 2600, the stows were here. We came down and retested the 2667. Right there, the stows are here. Oh, I don't need to keep on hammering this. You guys see what I'm saying. Okay, talking about the Kappa curve. The Kappa curve is now at, it is right here. It is tracking. It is above 0. So if I may draw a line here, this is more of a directional chart. It is above 0. It's a good sign. And this is simply tracking the value, this dotted line. So it's the value right now is 2.9. I just look at the overall trajectory. That's all. So nothing's written in stone. Nothing's written in stone. We're in a heavily volatile period. Whether or not we are going to get the full effect of the head and shoulders back to the neckline, I don't know. None of us know. All I know is that each of these levels that it encounters, there's going to be sell programs. Eventually, the pattern completion is 28.25. Do I think it can happen by the end of this month? Yeah, it's a fair shot. It can. Along the way, before it happens, can it do a quick detour down to 2600 before it does that? That can happen too. No question about it. But there are certain positive elements, which I discussed and clearly explained in simple terms at the beginning of this webinar, which suggest that we could get this move up here a lot quicker than we think. All I know is each of these candles are worth a lot of money. That's all. So if you're waiting for nirvana, like just sit there and just like not do anything, but just come in late to the party and try to make some real money, they will decimate you. You always have to be 2 steps ahead of the game. On your own, you guys won't be able to do it. I don't think so. Other than you just get lucky. With these charts, you have a high probability, very high probability, you'll be getting in on the lower end of the move and selling at the higher end of the move. Use my service, use my tactical charts as extremely powerful tools, money-making tools. That's all. Here is your S&P 500. Those were the E-mini futures. This is where we are. What would be technically very bullish is an extension of this candle back in this range, which negates this, which basically brings us up towards the first neckline, and this being the other neckline. I consider this to be the secondary neckline, which is around 2770 or so. Once we go towards 2770, which is roughly about 240 points higher from where we are, is a good probability at that point that we hit the 2818 level, which is the first of the major pattern completion, and the final major pattern completion where the macro inverse head and shoulder is exhausted is 2875. In the meantime, we have had multiple drawdowns which have bounced off this gap from the 30th of October. See, we're looking at the same thing in slightly different ways in this chart. Here's your macro trend line. This one going all the way back to the 26th of January this year. Seems like 20 years ago, right? Here's your line. Follow that line. This is your line. There you go. And this line has been retested, bounced off. It's a good sign. The second thing that I see tonight is at least on the S&P, you're seeing the crossover up again of the stochastics. That's a good sign. On this one, on the E-minis, where is it? Oh, on the E-minis, I just told you about 10 minutes ago that I didn't like the look of the stochastics. They're still pointing down. On the S&P 500, it looks like it's crossing up. It's a good thing. There's always going to be a slight discrepancy between the very liquid futures and the overall asset S&P 500, the trading vehicle, the SPX. This is your NASDAQ starting to look like a W formation. Apple should certainly help. Nvidia will crimp it a little bit, but overall, if it does manage to go higher, then we are looking at the 72.29 level. Not that we care because we don't trade NQ futures, but at least it gives us an idea whether or not this was a defined double bottom. So that's basically it, guys. I don't want to keep going on and on. All I'm basically saying is that use these charts for whatever you want to do. You got to make money in these markets. There's no two ways about it. Because I have never seen markets this volatile. I shouldn't say never. We did see it the first part of the year. But now it's quicker and faster intraday than what we saw then, which is a good thing for tactical traders, which is a very bad thing for price chasing retail emotional traders. It's a fact. So, and I'm always prepared. And as you know very well, we're very selective. We're not pushing all into tech. We're using different stocks in different sectors to trade. And we hit some big home runs, whether it be a pot stock like Tillery, which was 120% from the bottom yesterday after pulling back the first part of the week. Easily could have cost average down because after earnings it pulled back a little bit. Technically, nothing had broken. Price-wise, yeah, it looked like, oh, it was down $11. They're like, oh, they're all down. Big friggin' deal. The charts were fine. So I went with the charts, and it paid off very handsomely. And then we have all the other ones that we trade. Whether you look at an Ulta, which we sold right at the top, short-term top. Etsy, we're still long. Whether we are trading stocks like ICUI, which was a drop right after the thing. That's a weird stock, by the way. It was just lying there like a lazy fat crocodile, in the swamps, and it's just like lying there. And all of a sudden, it just raises up its fangs, and the frigging stock is up $24 in 2 days. That's the market. I don't control it. but it was beautiful. It was beautiful. So here's your daily on this SPX. We are starting to see, I'm going to zoom in a little bit. One second. This is good. Nah, make it 6. So if you want to just focus for a quick second, we are starting to see the stows turn again. Every time the stows turn, I'm sorry, the full stochastics turn, we tend to get a multi-day rally. Intraday, there's going to be volatility. That's standard procedure. We could open down 11 points, like big frigging deal. But I'm giving you the swing directional bias chart. And of course, I'm walking you through the 15-minute, the 1 hour, so you can make money intraday if you'd like. Once this turns, it generally connotates a multi-day rally. This is the way the shape is looking. You know that shape by now. That's an inverse head and shoulder, coupled with the stochastics turning, and coupled with the fact that we have got so much drubbing, yet the MACDs never went negative. That's very interesting. That shows internal relative strength. It's called reading the tea leaves. In the meantime, the RSI, which got deep oversold today, is well above 50, and you know what happens by the time we go into the 70 plus range. Sell, sell, sell. You know, just the way it is. I haven't set up the McClellan oscillator yet today, but I would like to see it, so let's see if we can get it on here. Oh, before I go off this one, let me show you the weekly chart. Oops. Let me show you a quick peek on the weekly charts, which I said, oh, this one looks really nice. This one is actually, this is the weekly. Sorry. Oh, what am I thinking? A little tired, guys. So look at this. The weekly is looking good. Right when it turns, you generally tend to have a 1 or 2 week rally, which kind of falls in with our calculation, right? That we're looking for a rally into the end of the month. Makes sense. We crossed over the 15th. Remember, once you cross over the 15th, the volatility subsides, right? Every single month, middle of the month, give or take a day or two, is heavy, wild moves. So today was the 15th. Today was the end of supposedly the Armageddon day for hedge funds. Maybe that's why the selling first thing happened for the first 45 minutes. I soaked it up, and the market just went like a wild bull. So the key is, we at this point, this is positive on the weekly, and once it crosses over, we should get a like we normally do. We should get a this is very similar to this. Look at that. 1, 2. So another 2 weeks of a rally, which brings us to the levels that we're talking about. It all kind of falls into place. And this obviously cuts out the noise in a big way. Now, if we get another big fat candle and this gets overbought, well, you know, things are going to ease back a little bit. It's just the way things work. It's no longer human. It's 120%. It is 120% mechanical. So that's it, guys. I'll configure the McClellan properly and put it up there early tomorrow morning. Any quick questions I can answer? Anyone? No? Okay. Sounds good. So I hope tonight's webinar was helpful. I certainly think it was. Like I said, there's a lot of ways to skin the cat. A lot. You can short a little bit. You can just do whatever you want. Just use my service. Use some of my alerts at least to catch these big moves when they come. Big moves. Look, we're down 1,100 plus points this week alone. 1,100 points. So guys, just simple stuff. there is going to be a dead cat, reflex, rally bounce, whatever you call it. You want to go dogmatically bearish and keep on shorting every rally? Feel free to do so. I'm not here to change your mind. Maybe you're going to be right. Maybe you're going to be wrong. Whichever the case, my business is to try to make as much money as possible off the volatility moves. And that's exactly what I'm delivering to all my Clueless A Trading members. So God bless you all. See you guys tomorrow morning. Get some sleep and enjoy this beautiful snow while it lasts, because I believe it's going to be sunny tomorrow, and all this lovely snow is going to be gone. Have a great evening. God bless you all. Thank you.